I'm going to introduce a guy that needs no introduction. We all know him as the grandmaster of blown accounts.
Oh, of all the people in the world that I don't like, I'm in a room full of them.
And he has put 85% of traders into depression and has made some of the newbie quit trading for good.
No.
We all know his name, the Almighty God. Come on, give a clap, give a clap, give a clap. AKA XAUSD. Good day, my traders. Welcome to today's topic, which we're going to be diving deeper into the title: Stop trading gold. Instead, you should mine it in 2025. Yeah, in 2025, there's a lot of things that's going to be happening, and I want you guys to be involved in it. I'm going to introduce a guy that needs no introduction. We all know him as the grandmaster of blown account, and he has put 85% of traders into depression and has made some of the newbie quit trading for good. We all know his name, the Almighty God. Come on, give a clap, give a clap, give a clap. AKA XAUSD. I know right there you're smiling. If you basically experience this guy, right, in the Forex industry, is no joke to some people. Some people has gone into depression. Some people has blown a lot of accounts. So the guy needs no introduction. I think it's everyone's favorite, right? XAUSD, which is gold, right? Gold is a beautiful pair to trade. But just like it's always known, right, is a gold digger, right? So one thing I always tell myself is whenever I'm trading gold one day will come to someone and be like, hey, I want to chill with you. And some other days and some other weeks will be like, nah, I'm not chilling with you anymore. I'm moving to someone else. Yeah, so you get the scenario, yeah, right? Some weeks your strategy will work, and sometimes it will be like, I don't need to be with you anymore. I need to be with someone else. Gold is not fixed kind of thing for people, right? So that is why I am coming with a solution for you not to trade gold. Instead, you should mine it. In this industry, 85% of traders always trade gold. I'm going to basically first of all break down all the futures insights about gold. The first key point is high volatility. Gold prices are notoriously volatile, often reacting sharply to geopolitical events, economic data, or changes in the monetary policy. This unpredictability can lead to large losses if positions are not carefully managed. Why is it volatile? Because it reacts to every economic changes. Anything can happen, do you understand, in gold? Most of you already know that gold is very volatile. Let's go to the second key point. The second key point is leverage amplifies risk. Many traders use leverage when trading gold, which can magnify both gains and losses. Without discrete risk management, a small price movement against the trade can wipe out an account.
They ask you how you are, you just have to say that you're fine when you're not really fine, but you just can't get into it because they would never understand.
Victim of that. Everybody has been a victim of that. Many people, out of greed, they decide to amplify their leverage. That means they add more lots. Say, okay, if I can add this lot 1 to 2, boom, I will make a lot of money, because gold, let's be honest, gold can boost your account. Yeah, it can boost your account. And the definition did not say you cannot amplify your leverage, but if you don't use a good risk management, any little trade that go against you, that account is done, it's finished, it's over. Another feature of gold is correlation with the US dollars. Gold often moves inversely to the US dollars. Sudden shift in dollar strength due to interest rate hikes or unexpected news can lead to rapid price reversal in gold. Traders must often monitor assets simultaneously, which adds complexity. USD is the base currency. That means anything that affects the US dollars probably will also affect gold as well. They can be a reversal of gold due to the United States dollar attached to it. You have to basically know what's going on in gold, and you must know what is going on in the United States. Sometimes you see that gold will be going bullish and sometimes will be going bearish. You just see reversal to the other way. Why? It's because of this future is connected to the United States dollar. The next is what? Market sentiment swings. Gold is considered a safe haven asset, so its price can be heavily influenced by fear or greed in the market. Sudden changes in sentiment can lead to price spike or crashes, catching traders off guard. What does safe haven mean? Safe haven means gold is a safe place, right? Where investors can just basically keep their money. Rest assured that gold will maintain that steady price. Let's say the economical things are crashing right now and you're looking for a safe haven. That means somewhere that you know you will keep your money. To maintain the price, that means to maintain the value of your money. Gold has been doing that for people a long time ago. So gold is an asset that it will continue running that way. When you are trading gold, you have to keep in mind that it's a safe haven. Number one, that means I can invest in gold and I'm rest assured that my money value is going to be safe. Sentiment swing is sentimental. That means people can decide to put in money and decide to take out money and invest in other things. When they feel that the economic is safe, they can basically take their money and now invest in more complex things like stocks. The ability of them not investing anymore, that means gold will crash. And the ability for them investing their money, gold will now buy. So all these things are the complications of gold. That's why you see, gold just hates me. No, it doesn't hate you. That's why we are here. Blue Gold's Insight will basically give you an eye opener on what really is happening at the back end. You have to know the reason why things are the way they are. And that's why I basically said it's more than your technical analysis. It's more than you drawing lines and charts on the map. I'm not here to sell you a strategy. That does not mean that I don't have a strategy. I have a beautiful strategy that works beautifully, right? Your strategy is beautiful, but the only thing that you're missing out, is the secret behind it all. There's something that envelopes that thing. There's something that makes it happen. There's something that makes it move the way it's meant to move. So it's up to you to basically understand the concept. So whenever you're in the market, you have it in the back of your mind that, this is what I'm going against. This is what I'm doing. Do you understand? So that you don't have this unrealistic dream of gold. Right? Even in trade in general, you guys have this unrealistic dream of gold. I will do this. As soon as I do this, I invest this. As soon as I invest this. Trust me, I've been in the market and that's not the way it is. As soon as you take that thing off your mindset and you drop it and you decide to get insight, the better. Let's move to the last one. Liquidity issue during off-peak hours. What does this mean? During certain market hours, gold can experience lower liquidity, leading to potential slippage. This makes entering and exiting trade more costly and less predictable. So when gold is in a low liquidity, you get to spend more in getting it. That's why sometimes you just see that wherever you buy, that's one way to take your price. They take your price to somewhere higher, right? Because there is low liquidity. That means sellers or buyers are rare in the market at that point. I'm basically giving you all the futures so that you will know what you're trading. You will understand what happens in the gold market. I'm not only going to come here to tell you the problem. I'm going to basically help you out and give you the solution as well. Not just only a forex trader, unlike all the whole forex trader. I'm also a data scientist, right? To bring my analytic skill to this market, and I basically don't trade the way 80% or 85% of traders trade. What you're trying to tell me is that at the end of the day, it's not really safe for you to trade around gold. Some of you don't know the difference between investors and traders. It's a safe haven for investors, but it's not a safe haven for traders. You don't understand. Before someone will make 1 to 4, he has blown 5 accounts and he's trying to recover. And when you recover that 1 to 4, it's like you just making back your money, and you want to make that type of money again and you blow it again and you're back to ground zero. So I want you guys to always think like a miner. Think like the gold miners. You can be a trader and also be a gold miner. Have you ever seen when they are digging up they are straining for the gold. They are drilling, looking for that particular area. They feel that gold is there. The gold don't have to be much. It can just be even a little sand of gold, and they basically bring it. Do you see how happy they are? Why? It's because they know the value. The gold don't have to be very large, right? You don't have to see a large gold. It's very rare for all the gold miners to see a very large gold. But they see the little ones and they basically mine it. And you see how happy they are. Why? Because they know the value of gold. Shift that mindset to Forex trading. Whenever you're trading gold with your real money, not a demo account. I'm talking to real traders out there that have invested and they are trying to invest in the future. Whenever you're trading gold, be realistic. Don't hope to see a big pot of gold. Instead, just focus on the little part of gold. What do I mean? I can leverage my lot size and use a good risk management. If I'm going for the longevity, I can reduce my lot size and go for the longevity, which can sometimes in return go against me. I'm not saying that the lot size that I'm increasing may not go against me. Yes, it may go against me. I've lost, yes. It's a bad day, it's a sad day. We'll move ahead. Whenever you're investing and you want to basically mine gold, you put a certain money. Oh, this is the money I know that if I trade it, I lose it. Whenever you're trading it, right, the first thing you should keep in mind is, I'm not here for the longevity. I'm just here to see what is going to happen in the market. So you amplify your lot size, but you use a good, realistic stop loss and TP. I have traded gold and I've made a lot of money. And at the same time, I've lost a lot of money. But 85% of the time, I make more money. You can never see my risk to reward more than 1:1.5. But I'm going to make more money than the person that wants to stay more in the market and keep trailing it. Why? I amplified my lot size. I will lose a lot. And the person that also does the longevity by giving a good risk to reward 1 to 4, that means they're looking for the pot of gold, it's the same amount is going to basically lose later on or not make anything. But I can neither make just that little sand of gold and have value instantly. I'm going to what? Increase my lot size, but give a realistic TP, which is take profit, and SL, which is stop loss. As soon as it's basically hitting, I am seeing the thing mining, and it has gotten to a certain amount that I'm good with. It hits my TP and I'm done. I don't have to wait. I am done. Your lot size is like the magnet. When you add more magnets to a certain place, the more highly will it be able to magnet metals to himself. If there's a pile of magnets here, the amount of metal is going to attract is going to be more than the one that is moving. Can you see what I'm saying? Exactly. So this is the area where I say, mine gold, don't trade gold. Be realistic. Gold is a very volatile thing. It amplifies trade. Boom. A lot of money is in. Boom. Stop losses are met. Boom. Take profits are met. At the end of the day, we neither take losses or what? Wins. And that's why you see some people go for longevity and boom. After they have waited and they saw a lot of profits, but because they didn't add a little bit of lot size, they waited, it's not enough, greed start coming in, let me shift my stop, all this stuff happens. Be a gold miner. The little that God gives to you, appreciate it, save it, enjoy it. When you lose, cry about it. What? Jump for it.
Nice.
But it's okay. Do you understand? If this video can get to 2K views and you guys comment mine it, I will show you guys the step-by-step guide on how to mine gold in the Forex. That's the only way I'm going to post that video. If this video can get to 2K views, I can show you guys the step-by-step on how to mine gold on the Forex market. I've never done that. But mind you, the year is coming to an end. So you better share this video, hit on the like button. If you're not subscribed, subscribe so that it gets to 1K at least. Let's at least get to 2K before November ends, so that at least I can show you guys step-by-step guide on how to mine gold. So that will be that for this video. Hit the like button, share so that you can get this video to 2K as soon as possible. If you like it, keep sharing it to other traders, and other traders will continue liking it, and I will know that you guys are interested for me to share how I mine the gold market. And don't forget to, in the comments, type mine it, and that'll be all. Like always, stay safe and stay profitable. Have a nice day.